Hey, everybody. Market Monday, 6 p.m. Let's do this. If you're just joining us, we do this every Monday night, 6 p.m. It is Market Monday. I'm your host, Blair Nightingale. We are going to take some time together tonight, dive into the markets. Last week, a very important market update. A lot of people very interested right now knowing more what's going on with our economy, what's going on with the Federal Reserve, the government, what's going on with the banks, right? A lot of stuff in the news regarding the markets and finance. Is this like 2008? Is my money safe in a bank? All these kinds of questions coming up right now. We covered that last week. Very important Market Monday update. So if you have not seen that, I highly recommend join us right there on YouTube. You can go back, Tradeway TV, and you can see all the episodes of Market Monday. We cover a lot of ground here on Market Monday. So please go ahead and go back and look at that one if you have not, because tonight we're going to dive back into our series looking at specific topics. We're really going back to the basics here on Market Monday. We've been around for a little while here on YouTube. And so we've been able to take a progression from the basics and move into some more things like options that we've done over the last season on this program to help folks know some of the more advanced stuff that they can do. It's not even that it's that particularly hard to understand, but it's something that a lot of people have never heard of. They don't know some of the benefits of what they can do. So we've gone ahead and we've covered a lot of ground there. We want to get back to the basics and just help folks who've been trading remember the foundation, because I like to tell people the basics in trading, some of it's basics in that you're going to learn it and you're going to graduate from it, and that's it. But some of it is foundational. You never graduate from it. I spoke to a trader this weekend, a futures trader, and as we were talking, he came to a Trade Surge event in Los Angeles just to connect with us and just say, I just want to be around some people who trade, right? Around some traders. And one of the things he wanted to talk about the most was specifically, when did you recall as a trader, he was asking me and a few others there, when you remembered, oh, I should keep this more simple? Because in the beginning, when we start to learn trading, we're breaking it down so that it's nice and simple so we can understand, oh, the markets aren't as cryptic, crazy, and difficult in many ways as I thought they were. But as we learn and learn and learn and learn and learn, we can overcomplicate certain things that don't need to be or shouldn't be overcomplicated, because it's actually just going to get in the way of our trading. This is the trader who doesn't need 7 screens and has 14 different indicators and 16 different intraday charts. And while there are some people who may know how to utilize all those tools effectively for themselves at any given time, typically, that's just a good example of something that we don't actually really need that. And that brings us tonight. Well, if we don't really know what we need and we don't really know what we don't need, then we ought to ask the question, what's the most essential thing that a trader really needs? And this is a broad stroke to start us in this part of the series, because we could say I can think off the top of my head, there's several tools that I would go, well, that tool is really important. That tool is really important. But one of the things I noticed in thinking about this very question is that for you guys out there learning to trade, thinking about learning to trading, considering different kinds of trading, I get questions about Forex. I get questions about options. I get questions about futures. I get questions about all kind of crypto, different markets, things like that. So there's different markets, but then there's also different approaches to those same markets. So there's a lot of ways to skin a cat, as they say. I have no idea where that phrase came from. I imagine most of us on this webinar tonight have heard that before. I have no idea where that comes from. But of course, it's true in trading. It's true in trading. You really can come at this so many different ways. And as I considered that, I could say one tool. I could say charting software, right? Some kind of effective charting platform. I could say fast execution on your orders, depending on what kind of trader you are. And that's the point. Depending on what kind of trader you are. See, there is a different approach Well, what do we call those approaches? See, that is the most important thing. And that is where we're going to go tonight. The one essential tool that every trader, keyword. Notice I did not say long-term buy and hold investor, which is a good thing, by the way. Long-term buy and hold, not a bad thing. Not a bad thing. Okay. I didn't say that though. I said trader, right? Gambler. I didn't say that. I didn't say gambler. One essential tool every gambler needs to have. Nope, didn't say that. Trader. So, what actually makes us a trader? Is it having charts? Well, some traders don't use charts, right? Many traders do. Most do, but some don't. Some don't. So, what is it? What's the difference? Is it the amount of money they have? Is it that they have a securities license? I can tell you this, a lot of people have securities licenses and they don't know how to trade. The license doesn't teach you how to trade. That's not what a securities license does. Now, there are different licenses, so I'm speaking broadly. And they have their purpose. They have their purpose, but it's not to teach a person how to trade, right? It's not to teach a person how to speculate. It's not to teach a person how to manage risk in a specific approach necessarily, right? So that's not it either. So what makes a trader a trader? And if there's something that makes a trader, then I'm going to say that is absolutely the most essential tool. And I'm not just trying to beat around the bush here, but this is the biggest thing. And no matter how many other bells and whistles we have, if we don't have this answer, this foundation, and we don't know it well, we don't remember. See, foundation gets built on, it never gets removed. Basics get graduated from, but foundation gets built on. This is foundation. So what is it, right? What is it? It's a system. It's a system of trading. And I'm going to go into much more specifics on this tonight to benefit us as we think about, do I have a system? Do I understand what a system does? What are the different parts of a system that I would have as a trader, have to have, in my opinion, in our opinion here at Tradeway, as a trader? But the short answer of it is that we have to have a system. And that is the essential tool. There's all kinds of other stuff that's really, really helpful. But the one that is universal is we've got to have a system. And as I coach students, as I'm on my own trading journey, getting our eyes, getting our behavior, getting our discipline, getting our activity inside the boundaries of a trading system and not outside the boundaries of whatever our system is probably the most common repeated coaching lesson. This is the system. Stay in it. Stay in the lines, right? Drive on the road. Stay in your lane. What's the lane? It's the system, right? So we need to have a system of trading. We need to have something very specific. It's not trading when we just open an account. Now, there's more brokerage accounts for retail traders right now. I've looked at this data. It was probably 3 weeks ago. I looked at this data now. And there's more retail traders participating in the markets than ever before. Okay. There was a huge spike in 2020 because of COVID, because of GameStop, things like that. But the technology has become so much more prevalent, so much more advantageous for people like you and me, which makes a great opportunity for us because the markets are so liquid and we can access them. So a lot of people out there, you guys have already started your trading journey. Some of you guys haven't started at all. You're just thinking about it. You're just wondering if this is something that's really possible, if it's something we can really even do. And the reality is even though I'm highlighting a system, which again, I'm going to explain more specifically, but the system is important. There are tools that are light years ahead of where they were even in 2015 when I began to learn this, right? It's so far beyond where it was just because technology is moving faster than ever before. So we need to know that just having access through technology, just getting a brokerage account, putting money in there, buying stocks and selling stocks doesn't necessarily make us a trader. Okay. What makes us a trader is we have a system that gives us certain parameters, certain rules, okay, action steps, helps us identify certain market opportunities specifically. Okay. We also need to talk about what it's not, right? What a trading system isn't. I think sometimes people in the financial community might look at trading and think that trading is something that traders actually don't think it is. I was talking to somebody in Los Angeles at the event this weekend, and I said, sometimes these different approaches to trading, it feels like denominations sometimes, where one denomination, not that I'm making a direct comparison here, guys, all right, follow me though, but there is some similarities in that you got one community and another community, and they both look at each other like they know what the other one is doing and why they're doing it, and they don't think that the other one's doing it the right way, right? But actually, what I find is what people actually think trading is and what they think traders think it is not actually what it is or what traders think it is, right? It's the straw man argument. It's easy to write something off when you put the label on whatever it is. Trading is a very specific system. We have to understand the different facets of that. And for you guys who want to understand how to trade or how to trade better, coming back to this foundation and understanding this is our number one tool. This is the greatest asset we have. And the tools like a computer and charts and fast execution and all those kinds of things, which are very useful tools, right? Because they've changed the game for us in how accessible the markets are and what we can do from home. That is definitely important. But what it does is those things still have to be built on the foundation of the system. Right now, I'll just take a quick pause here and say we've got friends coming in. I can see. I know it looks like there's a little bit of an issue with Facebook. So most of our friends tonight are going to be coming in through YouTube. So welcome to everybody. If we do have some Facebook folks on here, welcome to you. You can always log on Facebook, YouTube, and then right over here on my screen, right over here, you can pop a comment in the comment box, say hello, ask me a question, let me know where you're from, let me know what's going on. And I would love to engage, interact with you. I love it when you guys interact with me as well. This is an opportunity to come on here. We don't necessarily have to even do questions come to the end of our time that have to do with something directly that we're talking about in this specific episode, but it gives us an opportunity to ask a question, answer a question that somebody else probably has. Somebody else may watch this recording later. Somebody may be on with us live tonight, and they would like to answer that question as well. So please feel free, drop your name, say hi to me, and let me know if you have any questions right there as well. From time to time, I will check back on that and make sure you guys get taken care of. So there are very different approaches, but they all have similarities. A system universally is going to cover certain things, even if those systems are different. And this is something that the system we have here at Tradeway, the way we approach the markets, it has all of these things in it. These are all core values, if I can put it that way, core practices, core concepts, core applications that we want to have when we are approaching the markets. The first thing I would say is that for a system, what is a system? What do you mean by system, right? The system is not a crystal ball. The system is not a black box, right? It doesn't say A, B, C come together and I'm guaranteed on this trade, right? That's not what a system does. That's one of those straw man arguments that I hear sometimes, right? That's not what trading is. It's a fallacy that traders think that technical analysis predicts the future, right? Traders do not. I can't speak for all traders, of course, but here we don't believe that technical analysis predicts the future, right?
That's not what trading is. Trading isn't about knowing exactly what the stock's going to do, which, by the way, we can't know, right? We can't, there's no system that tells us the future. However, there is a system that uses technical analysis, which is something we focus on quite a bit, right? That we use it to identify behavioral patterns. We use it to look at the price of a stock and see what makes the price of a stock go up and down. Well, of course, buying and selling, but human psychology plays out over and over and over and over again in stocks that we are companies, stocks that you and I would know. We can go into the markets and we can identify these patterns and use them to manage risk as we go in and expose a very specific portion of our capital, right? A controlled portion of our capital to that price environment, right? We use those behavioral patterns. We like to say reliable, predictable, repeatable. Now, when we say predictable, we don't mean that we predict the future. We do mean that the pattern has established a real consistency, and we may be willing to expose a very measured portion of our capital to speculate that the pattern is going to continue doing the same thing because it has. And the markets show these patterns over and over and over and over again, right? And what we would call technicians, right? Technical analysts who use this have shown over and over and over again that these patterns are real and these patterns can be identified. So for us, we are identifying probabilities, not the future, right? We don't know exactly what's going to happen tomorrow, but I can look at different opportunities and go, now that one, A, is truly a great opportunity. B, no. Now, I don't know if A is going to do what I want it to do or not, but I do know that there are certain things I can look for that tell me that has momentum, that has good risk management, that has a higher probability of doing what I want it to do, right? Because it has repeated itself so many times in the past. And this is the foundation of that approach. Now, it's not the only thing we use in our system, right? It's not the only thing we use, but it is a big part of what we use in identifying probabilities. And that's what a system will do. A system is going to identify probabilities. Now, you can combine what I just described with an approach that is more probabilistic. We've talked about options on here. There's ways to use options in ways, okay, that you can apply options to a trade where you get very high probabilities of profit, what we would call POP or POP. A lot of brokerage accounts will calculate the POP. Now, obviously, that's not a guarantee, but it does give us a mathematical probability of profit in that particular position. This is why we've covered options on this channel extensively, because we want folks to understand that there are ways to use options that are not dependent on picking the direction of a stock, but we can do that a little bit differently and utilize some very high probabilities with the ability to identify a favorable price environment. And when you put those two together, you're starting to see a system that gives the trader who limits their activity to those environments. See, the system doesn't help us if we don't limit our activity to what the system says is a good opportunity. So we have to learn it, but we also have to control ourselves to apply it in that environment and do so over time, right? That's how it really works. And this is something that I think people who don't trade or don't understand trading or are just a strictly buy and hold mentality don't necessarily understand, that there are different layers to how traders approach this to make this something that can work consistently for them. Okay. So the next thing I would say is we also want to add in any system that's worth its weight at all, it's risk management. Now, there's risk management already happening when I'm saying my system identifies a good opportunity here technically and probabilistically, right? Big word, probabilistically. I'm using probabilities and I'm using technical analysis. So I'm using that, but I'm also going to go. There's a phrase we use around here at Tradeway. Your first stop out is your position size, right? Your first stop out is your position size. So what I mean by that is there is a tool we can use in the market, whether we do it manually or whether we do an automatic order, where we can stop out of trades. And there's plenty of conversation to have regarding stop outs in particular. Okay, there's lots of conversation and even a little bit of controversy. But the point is that stop outs start with position size. And this is not a long-term buy and hold approach. Okay. This is a shorter term position swing and even potentially day trading approach where you are going to run what we call stop losses or stops. Again, manually or something that you may do as an automatic. Okay. It's a little bit different depending on what you're doing. That's not the main point. The main point is we have to have good risk management. And the very first thing we do for good risk management is managing position size. So our system has to highlight how important specific position sizing is in relation to a person's capital so that we are not taking too much risk in any one trade. We're giving trades enough room to move, and we understand how that's going to play out over time. So risk management starts with position sizing, okay? Position sizing, what we might call risk of ruin theory, where we've got, and I've talked to traders even recently where, they make X amount of money in their trading account, they get overconfident, and then they go and risk enormous amounts of money in a single trade. And they literally, their account could only stand two or even in some cases one trade of that size. And that's what we would call, well, risk of ruin. If I lost the max position that I have right now, how many times would that happen before I lose my whole trading account, right? So we would want to understand how to really size that position down. Times like right now, where our students are facing a lot of volatility, volatility can provide tremendous opportunity, but it's also volatility. So we've got to manage the risk. First stop loss is position size. Another thing is profit management. What does your system say about when you're going to exit the trade at a profit? How much profit do you need to make in a trade to get ahead if you're taking losses, right? When am I going to know when I would take that trade off the table? How am I going to manage it so that if it's going to run, I have some room to let it run? But if I need to take some off the table at different points, I can understand how I would do that. And that is something where we go, okay, if I have multiple shares, I don't have to buy 150 shares and sell all 150 at one time. I can do what's called scaling out of a position. I can move up stop losses on a position. There's different things I can do to manage my profits. But profit management, Tom Sosnoff said, is risk management, right? Profit management is risk management. So we've got to have rules for managing profits. It's not just on the downside. It's understanding that I have profit targets. I don't always get up to max target. I don't always get up to max target. In some seasons, that doesn't happen. Right now, depending on how we're trading, there are a lot of trades that just don't get to some of the max targets that we've become accustomed to seeing them get to. Whereas in fresh new bull markets where things are running real hot, we have to probably flip the conversation a bit and make sure we don't get out too early because stocks are running so hot. We might be leaving more money on the table than we want to be. See, it's the opposite thing, but both are profit management. Okay. I mentioned stop outs and how we might specifically do that. And something like risk return, right? If I'm speculating in my trading and I'm doing consistent trades, what kind of return versus risk am I dealing with, right? Am I risking two to make one? This is a huge part of trading. Am I risking two to make one? If I'm risking two to make one, then I lose one trade. It takes two winning trades to make that up. See, I don't know what's going to happen tomorrow in the trade, but I do know if I flip that and I make two and lose one, I can lose two trades and win one trade and I'm breaking even. And I could have even potentially better than 2-to-1 risk return. See, what I'm saying is the system isn't just one of these points that I'm making. The system is putting together all of these points. You say, well, if you did that, you probably would eliminate a lot of stocks, wouldn't you? I would say the answer is yes. You're going to eliminate a lot of what you thought were opportunities, but you're limiting your activity to the specific setups and behaviors that are defined by the trading system. Okay. It's to keep the trader shooting at the most probable opportunities, maximizing gains when they come, minimizing losses when they fail, and then playing the math over time. This is where trading actually becomes a skill and not just some pie in the sky thing that we hope to make good guesses on stocks, and ultimately that's about all we can do, right? It's a lot different than that. Trade assessment is another thing I would say in a system, because there are the practicals of applying, buying and selling and managing, but what about the trader themselves? You and me are what I like to call the driver of the car. Trading system is your car, but you're driving it, right? You're driving that car. So to me, it just doesn't make any sense to apply all of our efforts into the system behaviors, but then not actually focus on the one who will be performing those actions, which is you and me, the trader themselves. Simple things where we have tracking our results and our emotions, tracking what's going on behind the eyes, between the ears, I like to say, so that you have an idea of where you're going and growing as a trader. That's actually a huge part of a system as well. I don't think the most effective trading system is one that does not address the driver, right? It's not just pie in the sky mindset stuff. It's actually addressing the fact that trading, Mark Douglas, famous trading coach, said, I believe it was 90% mental. It may actually be 80% mental in his book. I actually have his great book over here to my left, Trading in the Zone. But it is 80, 90, overwhelmingly mental, right? It's a mental thing. And that means we've got to address the driver, right? So we've got to be tracking and understanding, where am I at emotionally when I'm getting in, when I'm in, and when I'm out of trades. Doesn't have to be a whole journal entry, but just a little bit of data to know, where am I at mentally? Where are my emotions? If I'm losing, right, I'm on a string of losses, I want to know, well, how do I work that out? If I'm on a string of wins, right, which is great, but I need to know how to manage that as well, right? Because underconfidence tends to happen if you have a string of losses, and it can affect your trading. Overconfidence can happen when you have a string of wins, right? At the same time, you can get past a string of losses. There's ways to reset that. On the other side, a string of wins can build confidence, which can cause the trader to flow with the market and be very receptive to the information that the market is giving them, making them a much better trader, right? So these can be positive things. Having limits to what a person will lose in a certain period of time and then remove themselves from the market. I don't mean quit. I mean saying, oh, I'm done for the day, or I'm done for the week. That is a normal part of being a trader. On the other hand, if I hit certain profit targets for the week, for the month, for the year, okay, there are traders who go, okay, I've hit my goal. I'm done trading, right? I'm done trading for the day. I'm done trading for the week. I'm actually done trading for the month. I don't need more opportunities. I don't need to take more opportunities in the market. Warren Buffett said that's one of the challenges of a market that is so liquid, that you don't wait for the best pitches, right? You don't wait for the strike zone. And so we take too much risk even after we've made money, and then just give it back to the market because, again, we didn't have definition in our system, right? Emotional management, trade assessment is absolutely huge when it comes to trading. This is really a great overview of a trading system. So here's what I would say at this point. As you're learning the trading system, is there something in the list that I just went through that you say, you know what, I've never heard it like that before, or I hadn't thought of that piece in a while, or I had, but I'm starting to forget that, right? There's one piece of what I said, maybe one or two pieces of the list that I just gave that you go, I forgot that. Or maybe the lesson tonight for all of us is that it's not just one or two things here, but the system is really bringing the whole thing together. And that is a learning curve. That is a development process as traders, right? This being a trader requires grace for a process of development in the market. This is why it's also important to have small position sizes when we are learning how to do this. We don't need to go out and put large amounts of money in the market until we really understand how to gain consistency with these pieces, right? It's very important to do that. And of course, we're scaling up in our positions as we start to see that happen, right? That's the progression we want to go on. But it gives us a picture of what the whole system can look like. And this, for me, Blair's opinion, and I think it's an informed one, is the essential, not just the most important. It is the essential tool. You can have a trading account, indicators, price charts, watch lists, all kinds of stuff. But we've got to have a system that directs and guides us and tells us what we're going to be doing, what we're not going to be doing, and how to keep us on track, growing, 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 so we can go somewhere that we haven't been yet. Okay. That's our Market Monday tonight. One essential tool for every trader. If you've got a friend, a family member, somebody out there who you think they need to hear this, this is what trading really is, then send this on over to them. Of course, Susan, our tagging champion, is in the comments right now on Facebook. She's tagging some friends in there. You can always just tag a Facebook friend in the comments if you'd like to send that over to them. Of course, you can just send them the link on YouTube. If you haven't liked on Facebook, click the thumb. You can like us. We'll give you updates as we're doing content through the week. The same on YouTube. You can subscribe, ring that bell there, let us know. And we would love to send more content your way. Appreciate you guys so much for being on with me tonight. This is Market Monday. Of course, I will be back next week. We'll continue our Back to the Basics series, giving you the foundation that you need. For some of us, it's new. For some of us, it's a reminder, but it is the foundation we need to keep moving forward. And that's what we want to do here on Market Monday. Susan says, appreciate you. Appreciate you too, Susan. Appreciate all you guys for being with me tonight. Thanks so much. And again, we will see you next Monday right here, same time, same channel, and we'll see you then.